in chapter 6, again, what we're doing is we are integrating all of the information that we have gathered. So we know how to prepare payroll now. We know all the taxes, how to calculate the taxes that that need to be withheld, and the amounts that the employer owes for their portion. We know how to, for both Social Security and Medicare tax, we know how much federal withholding, how we calculate that federal withholding and withhold that from the employees' paychecks. We know that we have to, at least in Iowa, we've got to withhold from the state for the state purposes as well. We know how to calculate federal unemployment tax that's going to be due, which is an amount that is payable by the employer. And we know how to calculate state unemployment tax, if given enough information. And that as well is, in most cases, is going to only be paid by the employer. So, and we also know the deadlines for filing all of the reports to report all of that information. We know the deposit deadlines for making the deposits. We've taken all that information for each payroll and we've entered it into the employee earnings records and into the payroll register. Right, so we've issued the paychecks, employees are happy, but our job is not quite done. We need to integrate this information into the accounting system. Now, normally, especially in larger organizations, the payroll department is not actually going to be making the journal entries. It's going to be the accounting department that makes those journal entries. But the payroll department works very closely with the accounting department in getting the accountants the information that they need to make those proper entries. Now, in smaller organizations, a lot of times the payroll person's also going to be the accountant. The accountant's also going to be the payroll person. So maybe the same person that is making those journal entries. If you're using QuickBooks is awesome. It does it for you. When you enter in the payroll information, it makes all of those journal entries, but we need to understand exactly what goes into making those journal entries. Now, payroll is, for most organizations that have employees anyway, payroll is usually the single largest expense item on any financial statement. So it is imperative to make sure that all of that information, the expenses, are recorded accurately, right? In order to, because there's the potential for investors and creditors and all those users of financial information. They rely on that information to be accurate, and they will look at the payroll information to determine whether or not to invest in the company, whether or not to loan the company money. In addition, that information is used by management to make decisions about where labor needs to be allocated, which departments are maybe lacking in employees, or where they're a little bit bloated as far as employment is concerned. So the information is relied on by a lot of parties, and its accuracy is imperative. So this chapter, this is the last part of the payroll cycle, right? This is the part where we use all of that information and put it into the accounting record. So in order to do that, we're going to look at all the steps that are involved in making that happen. So first thing we're gonna focus on is recording the payrolls in the payroll register. Now, we already sort of started doing that. You've had homework problems as well where you do that, so you guys are masters on that, as well as posting it to employees' earnings records. Again, you've already done a lot of that stuff. We're going to look at different deductions in a little bit more detail. So, not taxes. Remember that we've already deducted the taxes, but we're going to look at both voluntary and involuntary deductions, things like health insurance or garnishments or life insurance premiums, charitable contributions that are made through employees' paychecks. Anything that's withheld from an employee's paycheck and then sent to a third party. We're gonna go through a list of all those different types of deductions. Some of them, like I said, are voluntary, so that the employee makes the choice to have that deduction. Some are involuntary. So if involuntary ones might be stuff like child support payments that the employee is subject to, or tax liens the employee is subject to, or different types of, if there has been a court order for a garnishment as well. So all of those types of amounts that are taken out of the employee's gross pay. Then we're going to look at the journal entries that are associated with payroll. There are three main ones that occur, and so we're going to look at the structure of those journal entries and talk about when they are made, what the timing of making those journal entries is. Then, since you've all you have some experience with financial accounting, you know that after journal entries are made, they are posted to the general ledger, right? To the general ledger of accounts. And from that general ledger, that's where we're gonna extract information to put those financial statements together. Now, we're not gonna be putting financial statements together, but just kind of to show you how that whole process works. Then we also got some journal entries that we have to record when payroll deposits are made. So we've got journal entries that have to be made when the payroll actually occurs. And then we also have journal entries that need to be made when we actually make payments for everything that's been withheld, right? We've withheld all of those taxes, we've withheld any garnishments, voluntary and involuntary garnishments. That money has to be sent off to a third party, whether that be the IRS or the state or, the child support enforcement. It's got to be sent off somewhere else. Remember, anytime cash is going out, we're going to make a journal entry that records that. So once those payroll tax deposits, the actual payments are made, we have to make a journal entry. Then we've also got another journal entry that, journal entries that need to be made at the end of the period. Okay, these are end of period adjustments. The biggest one that happens is when we've got a pay cycle that overlaps the end of a financial accounting period. So by that I mean, let me see if I can pull up the calendar here to kind of give you an illustration. Last month in November is a great example. So if we have maybe we've got a 2-week payroll. It started, or pay period. It started on the 25th of November and runs through the 9th of December. And employees worked during all of these days. Well, you can see we would have financial statements that would need to be issued as of the 30th of November, because that's the end of our accounting cycle. Or if we do monthly financial statements. But we're still right in the middle of a payroll cycle, right? A pay period. So we have to accrue the amounts, the payroll up through the 30th so that it can be accurately reflected on the financial statements for the time period that those cover. So that's one example of a type of those adjustments. They have to do with timing differences between the two cycles, right? So those are our main objectives in this last chapter. Okay, let's see here. So these are all the places where the payroll information has to be entered. In addition, this is once the actual paycheck has been calculated and issued. So it doesn't stop there. Once that paycheck has been issued, we still have steps that we need to take. So we've got to take it, and it's in this order. First, we enter information into the payroll register. So remember, that's the register that shows every employee for that particular pay period, and what they've been paid, what their deductions are, taxes that they owe. Next step is we then transfer on an individual employee basis the information from the payroll register into the employee earnings record, right? So, keeping in mind, payroll register, that's for the entire payroll. Employee earnings record, that's for each individual employee. Okay, and it's the employee earnings record is cumulative. So we're adding to it every pay period during the calendar year. Then what we do is we extract that information, usually from the payroll register, to the general journal. We're gonna make journal entries. Now, recording the totals for the payroll. The gross wages for the payroll, the federal income taxes that were withheld for that payroll, the Social Security and Medicare taxes that were withheld, the amounts of Social Security and Medicare taxes that are due from the employer. We have to record that as well. Any garnishments that have been, that employees are subject to. We've got to enter all that information, and this is for each time employees are paid. So if you have an employee that is, say they're terminated in the middle of a pay period, and you're in a state that requires you to pay them immediately, you do all the calculations for the taxes, issue that paycheck, then you have to make a journal entry, even if it's just for that one employee. So every time an employee is paid, it will trigger these journal entries that would need to be made. So in addition, once we do all of that at the time that the employee is paid, we have some other journal entries that are going to need to be made as well. The amounts that the employer owes for payroll taxes, the amounts that the employer owes for unemployment taxes, both student and FUTA, amounts that the employer owes for workers' compensation insurance. And we haven't really talked a whole lot about workers' compensation insurance, but that's one of the journal entries as well that would need to be made. And then, once we actually pay the payroll taxes, again, cash is going out, so we've got to make a journal entry, and that's going to be on a different cycle from when the employees get paid, right? And then we got to do those end of period adjustments as well. All of those journal entries then are going to be transferred over to the general ledger. Accounting department is going to use that information in the general ledger to put together the financial statements. Okay. All right. Okay. So we'll wrap up there. I know that was just kind of a little introduction to the chapter, but we'll pick up here. Again, a lot of this is review for you. You guys already know what a payroll register is. You know what an employee earnings record is, and you know what they look like. But we're going to spend most of the time working on those journal entries in this chapter. Okay. Have a great Thanksgiving. All right. Don't forget, we're not going to meet on Tuesday. So just enjoy your time. Hopefully you can spend some time with friends and family and eat a whole bunch and take naps and watch football. Michigan versus Ohio State next Saturday.
Watch the Cowboys lose, everything's
The funny thing is, with the principles of accounting, we just finished up this unit.
Did you really? Perfect
Yeah,
timing.
we just had a test
Fantastic.
like last week.
Fantastic. Yeah, it was all planned.
So I already have all the journal entries in my notes.
Oh,
So I have to
fantastic.
bring both of my notes for both classes.
Absolutely.